The Schwab US Dividend Equity ETF, or SCHD, has been getting crushed for months now, and higher volatility along with continued headwinds from sticky inflation, higher than preferred interest rates, and a stern Fed has had some investors very unsure about the future of this dividend growth ETF. But zooming out for a second, SCHD has been a monster, even outperforming the S&P 500 over multiple time frames historically. Now in this video, we are going to dig deep into the dividend growth king, SCHD, which is one of my absolute favorites, and explain 3 reasons on why this ETF is a huge buying opportunity for investors not only seeking cash flow, but also huge growth along the way. Now, if you hold on to SCHD or have ever thought about it, definitely listen in because you are not going to want to miss a thing. Before we get into today's video, make sure to please hit the first link in my description to support my brand new Patreon to access things like my 31-page A to Z dividend investing ebook, access to my brand new custom dividend tracker to track all of your ongoing progress, to view my 7-figure dividend portfolio, and so much more. I can't wait to see all of you guys inside. So first things first, some of the basics when it comes to the Schwab US Dividend Equity ETF, or SCHD. SCHD is a super high quality dividend growth ETF that has an expense ratio of just 0.06%. The ETF's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index, which has definitely been a blessing and now as of recently sort of a curse because some of the names within the Dow Jones US Dividend 100 Index over the last year have not performed all that well. Also, just a side note, I dug deep into the Dow Jones US Dividend 100 Index a few videos ago, so definitely check that out. Now, my first reason on why I think that the Schwab US Dividend Equity ETF SCHD is offering a massive buying opportunity for investors like myself that are willing to buy into it and wait. One of the main opportunities, in my opinion, is to lock in a decently high starting dividend yield of anywhere from around 3.8 to around 4% as of right now, with some massive potential dividend growth ahead. Now, SCHD's dividend growth has been very impressive, and that's one of the main reasons on why investors like myself want to buy into this ETF, because the idea of buying into a high quality basket of holdings that are going to pay you more and more and more over time pretty much every single quarter is definitely very appealing. And to be even more specific, looking at all the dividends that SCHD has paid historically, we're talking just 24.9 cents was paid in the form of dividend back in 2014. And now looking forward around just 10 years later, SCHD is paying almost 3 times that. But looking even closer into the actual dividend growth that SCHD has offered, year over year, there's been some years where SCHD has offered anywhere from say 10-20% dividend growth. But all in all, the ETF has paid more and more historically. So for the investors out there that are more dividend or income focused like myself personally and want to rely on high quality dividend stocks or ETFs dividends in the future to maybe pay for their bills or to retire, an ETF like SCHD, considering the dividend growth history, should definitely do the trick. Now, to be more specific about SCHD's dividend growth, the trailing 12-month dividend growth rate is around 7.13%, but the last 3 years, 12.33%, or looking at the last 5 years or 10 years, 13.92% or 11.32% on the 10 years. Now, this is a very important metric, especially for dividend growth investors that are looking to hold on to their investments indefinitely, not sell off their investments during retirement, not the 4% rule, none of that, for investors like myself that are looking to build a massive war chest of dividend-paying stocks and ETFs, or specifically for this video, a massive amount of SCHD, and use the dividends later on in life to live off of, and of course, hopefully even have extra money to live out the later half of your life exactly how you want to. Now, for the investors out there that do have that as their goal, that want to be able to hold on to an ETF indefinitely and use the dividends over time to cover all their bills and more, dividend growth rate is very, very important. Now, for those that might be a little bit confused on why dividend growth is so important, here's one simple reason on why it's very, very important. The US inflation rate, which is around 3.18%, but historically somewhere around 2% per year. So if we look at the inflation rate just over the last few years, of course, we can probably assume that best case scenario inflation will probably continue at around 2 or 3% per year, but maybe even higher as time goes on. So for an investor that's buying into stocks and or ETFs that don't have healthy dividend growth, the inflation rate is going to completely decay all their future potential dividends if things continue to get more and more expensive. But going over the SCHD ETF's dividend growth rate over time, the 10-year time frame 11.32%. Even when things got very, very bad and inflation rose like crazy back in 2022, the dividend growth rate of SCHD in theory would still outpace inflation. But it's not just inflation that makes the dividend growth rate of an investment so important. And specifically in the case for SCHD on why I think the dividend growth rate is crucial when buying the ETF. If we look at a dividend calculator and start with just $25,000 and add $12,000 per year, have DRIP turned on, and have an initial starting dividend yield of 3.5% and an expected annual dividend amount increase of 8%. Now, even though SCHD could have a higher or lower expected annual dividend amount increase, just going with 8% just to be safe. Now, if we were to invest this relatively small amount of money for 30 years, look at what happens over time. Now, before we go ahead and calculate all this and see what numbers we would get from now until 30 years, we have to understand exactly what's going on here. The power of compound interest is what's happening. Now, compound interest is the interest on savings calculated on both the initial principal and the accumulated interest, or in this case, dividends from a previous period. As the investor continues to buy more and more shares of SCHD, along with reinvesting all the dividends that were being paid from the previous year, the power of compounding is really going to take place, and the dividend snowball is going to get bigger and bigger. The SCHD investment would start at $25,000 and offer around $886 per year in dividends. Now, remember, this investor is going to be consistently contributing to the portfolio and is also going to be reinvesting their dividends. So the compounding effect is really going to take place. So much so by year number 10, this investment that started with just $25,000, an additional $1,000 per month, and dividends reinvested is already up almost to $190,000 and over $10,000 per year in dividends. Now, by year number 20, a little bit further down, $623,000 in principal and already $55,000 plus per year in dividends. And by year number 30, especially for the younger investors out there that definitely have some time on their side, by 30 years in, $2.25 million with over $328,000 per year in dividends. Now, I get it, we don't know exactly what things are going to cost in the future. We don't know exactly what SCHD's dividend growth is going to be in the future. We definitely do not know what's going to happen in the future. But just going off of some historical performance, we can get an idea of what things could look like if an investor was to invest a relatively small amount of money and just let the power of compounding do its thing with a specific ETF that does offer a nice starting dividend yield, but maybe even better, an expected annual amount of dividend increase of around 8% per year, which again is even lower than some of the past years. The next reason I think the Schwab US Dividend Equity ETF is a smash buy, especially before the end of the year while the ETF is still down in price, is for that reason exactly. The ETF is still trading pretty close to the 52-week range low, especially considering not all that long ago, SCHD was almost $80 per share. Now, looking back historically, SCHD is up around 160.27%, and that's just off ETF price return. SCHD around 10 years ago was trading in the mid-20s, and since then has been growing, pretty much at a steady pace until, honestly, just as of recently. Now, looking at the future possibilities of the Fed rate monitoring tool, looking at the possibilities of future rate hikes, and later on next year, even the possibility of some rate cuts. I think that if and when the Fed starts to cut rates sometime around next year, I think without a doubt stocks across the board, and of course ETFs, are going to benefit from this greatly. And for those reasons, I think it's important to get into the investment vehicles that you believe into long term before that happens. Now, the last reason I think the Schwab US Dividend Equity ETF is a massive buying opportunity, especially before 2024, is because the up and coming Reconstitution is going to shake things up and is most likely going to add a lot of new stocks within the underlying index and also take out some of the stocks that don't fit. Now, with the Reconstitution, of course, the hope is that the new stocks that are added are going to perform much better than some of these names that are sort of lagging over the last year or so. And because of this up and coming Reconstitution in 2024, I think there could be a massive inflow to SCHD if the new top holdings are favorable for investors. So there we have it. Those are 3 reasons on why I think the Schwab US Dividend Equity ETF is a smash buy opportunity, especially before the end of this year. But now I want to hear from you guys down below. If you had to pick one reason on why SCHD is a great buying opportunity before 2024, what would your reasoning be? Comment down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.